CEOs, investment bankers, and lawyers are down at New York's Museum of Modern Art today discussing the outlook for global M&A activity, all part of a Bloomberg-linked Dealmakers summit. And Cristina Alesci is there with a special guest. Cristina.
Thank you, Betty. I'm joined by Larry Schloss, the Chief Investment Officer of New York City. Thank you so much for being here today.
You're welcome.
So we're going to kick off a day of talking to dozens of deal makers, but we thought it was first very important to get the perspective of a pension fund investor. Now, I guess the thing that's most on people's minds right now is what the Fed said last week. It warned of significant downside risk. And as an investor, how are you thinking about that?
Well, we were starting to get worried about 3 or 6 months ago. We started selling our high-yield bonds and raising cash. We also sold some equities, so that currently we have about 8% of the fund in cash. These are uncertain times.
That's more than usual, right?
Usually we have 0. So there's so much uncertainty now. Typically a pension fund would have their liquid assets in the stock market, and there's just too much uncertainty to have our cash, our liquidity in the market, so we have it on the side.
So a lot of this uncertainty is undoubtedly coming from Europe and how the governments there are going to deal with the sovereign debt crisis. How exposed are pensions in the U.S. to European sovereign debt, and New York City in particular?
We have no sovereign debt of European issuers. I don't think overall public pension funds are very exposed at all. I mean, this has happened very gradually. To the extent that people have global bond funds, their managers have gotten out of that unless they're opportunistic and trying to actually take advantage of it. But my guess, and that would probably be hedge funds that do that. So I don't think there's very much exposure at all.
Okay. Now, specifically speaking about New York City's assets under management, you have about 120 billion. We have a chart showing, how that's broken down, but a good chunk of that is actually being put to work in private equity, right?
Yes.
Now, we broke a story a few months ago about your efforts to trim down the number of private equity managers that New York City gives money to. Why is that important right now?
We have about $13 billion of commitments and about $7.5 billion of assets in the ground that have been drawn down. It's managed by about 110 GPs and 170 funds. So basically, it's a big index of private equity. The private equity business is you have to be in the top quartile managers, otherwise it's not worth the illiquidity of the asset. So our job is now to look at the portfolio and optimize it.
So what's the ideal number?
The ideal number is probably 60 to 70 managers. So
you're going to you're going to trim quite a bit of the portfolio. Now, are those going to be in secondary sales? Or?
Yes, we've announced we're selling about $2 billion of our commitments, although as the markets become more uncertain, we might not sell it. It's a very long process to sell them, and also it's a one-by-one sort of affair, so it's not like selling liquid stocks.
Right.
So it takes time. And again, as the equity markets are uncertain, we're in no rush to sell it, so we might just wait until there's more calm in the markets.
Speaking of uncertainty in the equity markets, are you planning to rejigger your exposure to equities versus fixed income?
We're not day traders,
right.
So we think long term. We also think how not to get stuck in downdrafts. So we think long term, the equity markets are a great place to be. Which is why we sort of moved some money into cash, and hopefully we'll catch the bottom on the one hand. On the other hand, you slowly leg your way in. That's a very long-winded way of saying we've trimmed our equity positions a little bit.
And you'll continue to trim them?
No, I think we'll stay where we are right about now.
Which is?
It's
30.
about 60. It's about 70% equities, 30% fixed income when you add in private equity and real estate. And we've just redone an asset allocation for all the pension funds. And ultimately, we're going to move that down to probably 65% equities and 35% fixed income.
Great. Well, thank you so much, Larry, and I hope you come back to Bloomberg for a longer interview on set at headquarters. Betty?
Okay, Cristina, thank you very much.